Hey there, welcome back to my YouTube channel. Really appreciate you being here. So, if there's some new people here, it's probably because you watched the gummy bear video recently. If that's the case, hey, this is kind of not my normal content. Excuse me, this is kind of my normal content, but not so much. I'll get into it. Anyway, so I typically talk about politics, don't really usually do hot stuff. Sorry, wow, that was a sentence. Goodness. Sorry, I've had a really just draining week. It's playing catch up with me today. So I'm gonna do my best. I'm gonna try to stick it out and give you a good one. So anyway, I'm thinking about adding in, eating like a hot sauce or something on a nacho right before I do these streams. And then try to get everything I wanna talk about out before I'm allowed to drink water. And then I can interact with, what you guys are saying. So one day, maybe this stream will get large enough to where people will come in regularly and, the chit-chatty stuff. What live streams are supposed to be. So anyway, what this one is about is a little bit more unusual. Typically I talk about politics, sometimes the economy. This one is about both. This particular one is just my personal observations over the past, I'd say about 9 months or so. Technically about a year and a half, 2 years, of just me like learning about the economy, learning about the market, and then just following up on politics and trying to learn as much as I can about that as well. So all this aside, or all that aside, basically what I think is going to happen with the stock market is, long story short, we're going to see a big drop. And then I think we'll see a dead cat bounce. Basically, like it'll come up a little bit, but it'll be a false recovery, and then we're going to go back down. And that's going to take place. It's going to start dropping probably mid-October, mid to late October. And then I think it will continue to drop and drop and drop all the way through February. I think late February, early March, I think is when we'll start to see a little bit more of a bottom. Could be a false bottom. I think we'll see a slight recovery March, April-ish, somewhere around there. And then I think it's going to slow back off, probably sometime in the fall or winter. And that's going to depend on a couple different factors. So what's been going on is historically, anytime there's a kind of a bigger and also questionable election, stocks tend to drop because the market gets scared. They don't know what's going to happen. Earlier in the year, it was this absolutely historic, like never before seen, basically red landslide in favor of like Republicans taking over everything. The number one issue was the economy. So, and then a lot of the White House speakers, chair members, gosh, I'm trying to remember her name. She's this tiny little old lady with white hair. She's been an economist for like her whole life. And she's like, I think almost 100 years old or something. Kidding a little bit. No, seriously, I think she's in her 80s. But anyway, she was asked in an interview like, hey, so what's your plan? What's the administration's plan for dealing with the inflation situation and rising gas prices and all this kind of stuff? And she mocked the interviewer, laughed, and was like, it's not like we have a magic wand and can just make it go away. And then she scoffed and walked away and ended the interview. So it's not a great look. And based on the plan of action the Biden administration has taken thus far, is pretty much no plan of action. They openly came out and said that they were trusting the Fed to do all the work, and what the Fed has been doing has not been working. So that put a sour taste in a lot of people's mouths. Well, Roe v. Wade happened, and then now we're seeing a record number of first-time female voters step into the ring. Gosh, I'm losing words. Words are hard for me right now. I'm so sorry. I'm so tired. The registered voters. They're now registered voters. So presumably to vote Democrat. So that's put a lot of things in flux because the left is not really doing a whole lot about the economy, but the right is making big swings in more, I guess, radical positions than they historically have taken in the past. So long story short, this upcoming midterm election is becoming a bigger, more uncertain election than is typically the case for midterm elections. So I think there's going to be a lot more people paying attention to this particular election. As a result, it's now become a more uncertain And the byproduct of that is I think a lot of people are going to pull out of the market. Well, lately we've been seeing when markets are dropping, the top five, stocks, besides like Walmart, tends to be tech stocks like Apple, Microsoft, companies like that. In the tech business or in the tech world, apparently this is according to. I remember seeing, I think it was Sagar was doing a monologue. I was trying to find the video before the stream started and I couldn't, so sorry about that. But according to Sagar in his monologue, he was saying, and he pulled up some facts and figures, but he was saying that a large portion of real estate investors are from the tech sector. So either they invest in tech stocks or they work for a tech company. And they have a lot more extra capital that they use as like a side hustle to put into real estate. Well, that's starting to dry up now, and as a result the housing market is going to get hit a little bit more than normal when this the real estate market is getting hit. So typically you want to diversify your investments between stock markets and between real estate, because if one goes down the other can usually support it, but I think in this particular case they're both going to come down. It'll just be a little bit more delayed for the real estate market. Also, the Fed is actively and aggressively trying to squeeze the housing market. So they're trying to make it come down, and hence the interest rate hikes. So the interest rate or the inflation report came back recently and it was not good. And that made the Dow Jones crash. I think it was like 500 points or something like that. It was a lot. I don't remember the exact numbers. Sorry. I wish I were more prepared. This is a terrible stream already. I feel like so sorry. I feel really bad about that. Usually I'm a little bit more prepared. I'm just out of it right now. Anyway, so due to the not great interest rate or inflation report, the Fed has come out, Jerome Powell, the chairman of the Federal Reserve, has come out and said they're going to do 3 more interest rate hikes this year, and they're going to be looking at a 1% or 100 points interest rate hike, which that was unheard of, doing a full point in just one single go, but they've already done that multiple times now this year, so that's not great. So anyway, the market's supposed to be crashing and it hasn't been. People usually start selling off, but this year they haven't been. So because they're fighting the Fed is having to fight back harder to make it like really go down. So I think now the stock market is starting to see like, okay, yeah, we're gonna believe you this time, and we're gonna go ahead and come on down. So it's starting to slump off already, but I think we'll see a little bit of a bump and then it'll really drop off. All this being said, the housing market, I think, will also follow suit. I think with the interest rate hikes being even more aggressive, so the housing market is already starting to dip, but I think it will continue to drop. I think we'll see more of a parabellum type motion. I'm thinking probably in mid to late November to like early December, somewhere within that window, I think is when we're going to see that arc really start to take shape. And I think we're going to see it like really start to drop across December, January, February. I think end of February, beginning of March, we'll start to see it kind of level out a little bit. And then I think we'll see a little bit of an increase come April, May, somewhere around there is when it will start to come up a little bit. And I think that's because most people believe that we're at the bottom. They're expecting the housing market to crash. And a lot of people in the wintertime that are thinking like, okay, the housing market's dropping, I don't have as much, this is going to be the best price that I'm ever going to get for my property. And they're going to be like, okay, I'm going to sell now. Hopefully sell now, get a bunch of money, and then take that money and then buy a new home with it before the interest rates go up. So I think the drop off will happen. It'll trigger a kind of a, I don't want to say panic sale, but a lot of people have been expecting there to be this big housing market drop. And I think they're going to see it coming because it's starting to slope. And I think when it starts more aggressively sloping, it'll kick in. The big point is going to be January 1st. So on January 1st, the student loan hold that's been taking place is going to be lifted. So there's a lot of income that people have been relying on that. So with the cost of living going up and up and up due to inflation, the housing or the student repayments have been put on pause this whole time. So once that goes away, again, post midterm election, I forgot to bring that into it. Okay, so anyway, a number of things are also happening pre-midterm election. The Biden administration's putting out, I think it's 1 million barrels of oil into the economy. I think it's each day or each week. I forget the actual figures. Forgive me. It's probably easy to look up. I just can't right now. So, I mean, I could, but it'd take more time than I want to. So anyway, that's been bringing gas prices down, which showed a kind of a false indicator of a decrease in inflation, which is not actually accurate, because once they stop doing that, putting oil into the economy or into the market, once that stops happening, most likely post midterm elections, then we'll see inflation go back up, and then house inflation will increase. Things will become more difficult to maintain on a day-to-day basis for the average American, and then I think people will be looking at a situation where they're getting squeezed both in their day-to-day living and with their student loan repayment. And they'll think like, now is the best time to sell my most valuable asset, which is their home. And they'll probably just rent for 6 months to a year, wait for the economy to come back down, and then probably buy a new home later on down the road. So anyway, so a lot of people have been waiting for this. Actually, a lot of people, a lot of millennials and Gen Z, according to several different polls, they're actually actively looking forward to a housing market crash. And I can't say that I blame them. So anyway, I think a lot of people are going to start seeing all this happening across the wintertime, because wintertime most people don't want to sell and move anyway. So naturally, housing prices will drop off, but I think supply will not catch up. And I think people will start to think that it's the bottom come springtime, so like April, May, somewhere around there. I think people that have been waiting to buy a home will finally see inventory open up, and then they'll start buying in. So I think that's why we'll see a bit of a recovery. But at the end of the day, we're still going to have really high inflation and also mortgage rates. So I think that group of people will like dry up, and they'll see the housing prices go up quickly again, and that will quickly pull a lot of people out of the market, and then we'll see it go back down again. From this point, I mentioned in a previous video that there's basically a gridlock between people trying to sell their home, people needing to buy a home. People want to sell their home to buy a new one, but finding a new one to purchase is too difficult, too expensive, so they're not able to do that. It's one previous, I don't remember which one it is, but anyway, that's still going to persist. That's still going to happen until we get more reasonable housing prices again, and that's not going to happen for a while on our current trajectory. So what I think could happen is, and that also depends upon who gets into who wins the midterm elections. So I think if the Democrats reclaim the House and Senate, I think things will just basically have a continual, gradual decline. It'd be like a hang glider, slowly, steadily going down and down and down. I don't think there'll be a big drop off, but I think in the long run, it would probably harm us down the road. So reason being, because it's not going to actually address the problem. And I think we're going to look at a situation where we have interest rates are still, interest rates. So interest rates and inflation are still going upwards. I think that's what's probably going to happen because we're not addressing the gridlock that is basically holding the bottom up. I know the Fed is trying to do a soft landing. I don't think that's possible at this point. I think we need a hard crash. That way we can bounce back. So anyway, those are my thoughts on that. If Republicans take office, back when, earlier in the year, the head of the Republican Party, Mitch McConnell, was asked in an interview like, hey, so what's the Republican plan for midterm elections? And he's like, we have no plan, and that is the best plan. And unfortunately, he was correct in that. I mean, just not being a Democrat in this economy was going to be the biggest benefit to the Republican Party. However, since Roe v. Wade came out, now they're getting a lot of backlash. Democrats are putting pressure on the Republicans like, hey, they don't have a plan. And they're correct. The Republicans don't have a plan. So now the Republicans are scrambling to try to find something. And I think if they end up taking control of the House and or Senate, I think they'll have to come up with a plan quickly. And knowing what Republicans tend to do most often is try to reduce taxes, especially on corporations. So I think what they're going to do is they're probably going to try to alleviate the capital gains tax on unfinished homes. That will incentivize builders to finish the homes that are built because there's a huge amount of homes all over the country. Actually, just 2 weekends ago, 1 or 2 weekends ago, Coming back from Cincinnati, visited the zoo, and on our way back, we saw this entire housing addition, like a subdivision that was halfway built. So just all these homes, whole neighborhood, just unfinished. So apparently that's all over the nation. Again, according to Breaking Point News, they've got several videos about this. So I think if you can alleviate the supply side, because right now when interest rates are so high, it's too expensive to get a loan to finish the build on the home. And that's the issue. So I think if capital gains taxes are removed or at least reduced to incentivize home builders to finish these homes, that will alleviate the supply problem that is causing the gridlock. Once that goes away, then you'll see the supply open up, which would bring the demand, which would bring supply much higher than demand, and overall housing prices will collapse. I think it will collapse the economy, which I think is gonna happen regardless anyway, and the sooner it happens, the better. So what I guess they're probably gonna do is they're probably gonna blame it on the Democrats, like, hey, we inherited their economy, technically true, but they're the ones that crashed it, also true. So I think there's gonna be a big plummet, and then we will see an actual recovery. So I think we're gonna there's going to be a better equilibrium of supply and demand, and we'll start to actually get into full and actual recovery mode. So I think we'll start to increase from there. But I don't think that would happen until probably late summer, early fall, somewhere around there. Maybe mid to late fall is when we'll start to see an actual like growth start to happen. Then winter will come, see a normal dip, and then come 2024 is when I think we'll see actual growth. So I think that's when the economy will start to genuinely improve. So these are my predictions. So if you're trying to base like housing judgments and stock market judgment around this kind of stuff, this is what I'm thinking. If you think it's a good idea, please give us a like. Really appreciate that. But no, that's what I was gonna say. But no, genuinely, like if you like this kind of stuff, please leave a like on the video. I have gone through a lot of effort to research all this stuff. Unfortunately, I don't have it up right now. But yeah, as far as stocks are concerned, I mean, shorting large tech companies would probably not be a bad play. Shorting them in early to mid-October would probably be your best bet. Or just short the SPY or the S&P 500, that would also be a good play. If you want to get into individualized stocks, there's one that I think that I personally like. Actually, there's two. There's two for a couple different reasons. One is AMC. I think that could potentially there could potentially be a short squeeze triggered if the whole economy comes down, and if there are hedge funds that are over leveraged, they might get margin called on shorted stocks. So AMC is a heavily shorted stock, so we could see a big boom out of there, especially since I think AMC is currently like sub $10, which is a really good deal. The other one I would more strongly consider, it's probably AM, Antero Midstream. They're a natural gas company that supplies Denver, Colorado. With the situation going on in Russia, Germany is fully reliant upon Russia for natural gas. Russia threatened to turn it off, and then everyone was like, "Oh, wait," and Russia was like, "Okay, yeah, we'll keep sending natural gas." I think, especially the way the war is going now, where Russia is more on their heels, I think they will probably They could. I think they could. There's a decent chance that they will shut the gas off to Germany unless some kind of ultimatum is met, and they'll do it in the wintertime when Germany is going to be most vulnerable to such a, I don't want to call it an attack, but such a situation, an adverse situation. So if that happens, then Europe is probably going to have to outsource all of their natural gas to other countries, and I think America is going to be a big one. Long story short, I think American natural gas companies are going to increase in value because we're going to start selling our natural gas over to Germany and the rest of the European continent. Antero Midstream is only, I think, like $10 a share, and it's one of the highest paying dividend stocks for value. So I think they pay out like 33 cents a share, which I know that doesn't sound like a lot, but it's actually for a $10 stock, that's pretty good. So anyway, so if you scoop them up while they're still like right around that $10 mark, or if they get back into the $9 range, that would be great. I haven't checked them today. That would be a good pickup, because while you're waiting for them to while you're waiting for Russia to pull down the European natural gas situation, their stock will go up. While you're waiting for it to go up, you'll be getting paid on that. If it doesn't happen, you're still going to have Colorado in the wintertime. It's going to be cold. Natural gas costs are going to go up naturally. So I think they'll naturally see an increase anyway. Plus, that stock in general is very cyclical. They fluctuate between like $9.80 to $11.60, almost like clockwork. It's usually over a 3-month spread. So it's really easy to follow. So right now is a good time to buy in because it's under $11. If it gets over $11, you don't think Russia's gonna pull the plug, it'd still be a good time to either collect dividends or just pull the plug and take your quick profits. So anyway, that's what I got. So if you like more stuff like this, please subscribe to the channel. I like to talk about nonpartisan politics and also the economy. Stuff that's kind of interesting to me, and I think it's useful to you guys. Also, I really see a good value in there being like political talk that's not hyper partisan and just screaming at each other. That's not helpful. That doesn't fix anything. So anyway, I look to grow a community and hope you can be part of it. So thanks for watching, and as always, stay classy.